take a look at your commodities, the oil prices up. Of course, we are waiting to hear from OPEC around the stockpiles globally, but also the world's second biggest economy opening up, and that being China, really increasing a demand from what we saw a few months ago. And then onto the local unit. Gary Booysen standing by to tell us why the rand has depreciated as much as it has against the US dollar. Are investors or market participants waiting to see what's going to come out of State of the Nation, or is it a global story? And Gary Booysen, who's a director and portfolio manager, joins us now to unpack that. And I want us to start with that rand story, Gary. Why have we seen the rand depreciate as much as it did, as quickly as it did? I think at around 1778 at the moment. What's the story that's putting pressure on the local unit?
Well, it's a little bit of a number of factors. So we've come into the week with a weakening currency anyway because of those strong non-farm payroll numbers that we had out of the US on Friday. Just sending the dollar surging against almost everything, and that story has continued. So we've seen that both the euro and the British pound have been falling against the US dollar. So some of that sharp rand dollar move was on the dollar side. It was an international story, but it certainly doesn't account for all of it. This is some local factors as well. Now, there were no significant economic releases that prompted the move. It does look like it's perhaps nerves ahead of Sona. That's really the only explanation that I can see on the wires at the moment. But a lot of panic, I think, at the moment. There's a little bit of risk-off mood flowing into the US markets. We have the S&P 500 down around 0.5% as well. Whenever we have risk-off trade, that also feeds into the local currency. So just, I suppose, a confluence of factors that is driving our currency weaker.
And then the all share, a little bit of a slow start to the day, but ending off the day just 0.5% in the green. A really positive moves coming through from the industrial stocks. Your thoughts on the day's movement on the JSE?
Yes, absolutely. It was all driven by the industrial stocks. So the industrial 25 up over 1%, while the financial 15 was flat on the day. So really the heavy lifting being done by the industrials. Part of that is a recovery in Sasol share price. Sasol just helping to lift the mood a little bit after obviously the big fall yesterday. So that kind of driving the market a little bit higher. So it's a little bit of everything, but still choppy day. And I think we're waiting to see, we still got a very keen eye on international earnings. And I think everyone is waiting for what happens at Sona. We had some stock specific moves as well, which just impacted it. So we had the likes of Pick n Pay down around 8%, Sappy down over 10%, and Coronation also down around 11%. But all of that was on news flow. Generally, it feels the market is choppy. Locally waiting for Sona and internationally waiting for more corporate earnings.
Yeah, let's get into those company updates. Pick n Pay's trading statement today, company indicating that it's losing about 60 million rand a month, Gary, because of the load shedding. Of course, they have been able to keep sales, I suppose, at a satisfactory level, but we're really starting to see the material pressure that the retailers are facing from these power cuts.
Yeah, as I said, Pick n Pay down 8%, market not liking this update at all. And while you do have positive sales growth, so positive revenue growth, we also have price growth of around 10%. So that just tells the story about what's happening to Pick n Pay's volumes. They're just not getting things sold off the shelves. Obviously, that load shedding cost that you mentioned is significant. So if you take that forward, if we projected that it will cost them 60 million a month in diesel, it doesn't look so bad when you compare it to their revenue line because it makes up less than 1% of their revenue. But if this was the case on their projected earnings for the year, this would cut their earnings in half. If they didn't have to pay this diesel cost, they would make twice the profit that they're going to make based on the consensus estimates. So 208 days that they've suffered power cuts. It's really affecting the business. It's affecting their consumers. It's affecting their supply chains as well. It's making it very, very difficult to operate.
No, very difficult to operate indeed. And then another company that faced a bit of a blow today, Coronation losing its fight against SARS, being ordered to pay those taxes plus interest on those international earnings that they had. It's no wonder that the share price slumped as it did today. But what did you make of that statement? I think many of us weren't really surprised of the decision that was ultimately made here.
No, so we weren't surprised. We knew the case was going on. This case has been running for many years. So it started in 2017 when it went to the Western Cape Tax Court. Coronation Investment Managers SA actually won at that stage. SARS appealed at the Supreme Court. That was on the 17th of November, and obviously yesterday the judgment was handed down in SARS's favour. Coronation says they are considering, obviously, the next court to approach would be the Constitutional Court. So they are speaking to their legal teams and seeing if it's worth taking this on based on constitutional grounds. But certainly the market not liking it, and obviously there was a risk premium in it, and with that, with the decision not going their way, the share price is being punished on the back of that.
And then another share price that was punished on the day, Sappy, their latest report showing that the high customer inventory, as well as the weaker demand in China, Gary, really just having an impact on the business. What did you make of that update?
No, so I think it was weaker demand across the board. So just flagging higher interest rates as an issue. Tightening economic conditions is a problem for the business. They have had bump a couple of quarters. So this is obviously their first quarter results, and I think it's the best quarter they've ever had. So it was really the guidance of where they see the business going that I think spooked the markets. I mean, profit was up 54% to $190 million for the quarter. Revenue was down 2.2%. So revenue number wasn't great, but Sappy is a very established business. So yeah, it was a good quarter, but it's the outlook that's got everyone concerned, and it really just suffering from what so many companies are suffering from, and that's a challenging international environment, high inflation, and obviously the high interest rates that are being forced into so many jurisdictions to try and combat that.
Absolutely. As always, Gary, thank you very much for your time this afternoon. That is Gary Booysen, Director and Portfolio Manager at Rand Swiss, joining us for the wrap of the markets day that was. And that's all your business news for now, Dumela. When we come back in the next hour, we're going to be speaking pre-Sona, what the president should be focusing on from a point of view when it comes to the economy. We'll be speaking to economist Azar Jamin on that.